Hey, what's up, everybody? Welcome to the Mortgage Coach community. Welcome to a top producer interview. This is my first interview with Travis Wright out of Colombia, South Carolina. What's up, Travis?
Hey, Dave. What's up, man? Thank you so much for having me on. This is a huge honor.
Yeah, well, hey, it's an honor that you're making time to give back to the industry. I love your story. Most of your story I've heard from other folks. I've heard it from Clint Hammond. I've heard it from people that support your company, Mortgage Network. And what I've heard from others is like you are just a shining example of a modern loan officer, and you're doing all the right things right in this market. So I looking forward to hearing more of your story.
Cool. Thank you.
Good. So I know you started in 2016, and I know you're completely killing it with Mortgage Coach. Like you are a modern mortgage advisor. But for people who don't know you, just tell us a little bit about your mortgage practice, a little bit about your story.
Yeah, so I started in banking in 2006, 2007, which was a great time to get into banking, right? And I was on the branch side, so I was tasked with growing deposits, growing loans, referring out to mortgage, referring out to securities and treasury management. It was managing a teller line, a lot of things that I really just was not good at. And the time came where I just knew that there wasn't going to be a long-term play for me. And so you mentioned Clint Hammond, who I wouldn't be where I am today without him at all. And he used to refer me all of his equity lines and construction loans. And so I got my feet wet with those types of real estate lending products, and really just got to the point where I was like, I can't do this anymore. And Clint talked me into coming over, and the first year, 2016, started my pipeline. We closed 65 units that year and doubled my income from the bank, and actually enjoyed coming to work, which was a huge, take the income out of it, being able to do something that you liked and finally connected with who you were as a person, and having the opportunity to serve a lot of different families and have a product that people need, right? Who needs a checking account? Not a lot of people. Everybody hopefully will eventually need a mortgage. So that's how I ended up in the mortgage world. It's a little bit of an unconventional path, but it's been great. I love the industry. I was telling you yesterday when we kind of caught up that when I didn't know what to do or what I was doing, didn't have anybody to talk to, in 2016, I just sat there and watched Mortgage Coach videos. And so to hear all the interviews and to be able to do this today is pretty cool.
Well, I love that you learned how to sell, and you've been such a big part of our community since 2016. And so I'm really looking forward to not necessarily talking about what you did, last year or the year before, because this market had shifted, but the fact that you learned this industry, being in the Mortgage Coach community. By the way, guys, this is a guy who's done over 1,335 total cost analysis. So he's served, over 1,000 families. It looks like just in the past 30 days, you've done 18 total cost analysis, and then you've got 7 that you're using some type of our integration. So it looks like some of them, automation is creating the TCA'S, and some of it's you or your team. So I do have some questions at some point on that. So I know prior to this shift in the market, you were helping about 300 families a year. Is that right? Did you get up to over 300 families?
Yeah, 2020 was 306, 305, 306. And then 2021 was a very painful, you remember the one you lost because I was at 299 and didn't get to 300.
Well, for all of us mortgage professionals, I mean, that is just a super big milestone where, you clearly know how to win the trust and scale of a lot of referral partners. You got to be a good leader to do that type of volume. So you've got team around you. So talk about the pivot, because we are now in a market where rates have gone up over 7%. And that's really where I want to get to, like it's incredible that you did that kind of volume, but you've also, you're not doing that kind of volume now, and no one is, but you're still really successful. You're still helping, what is it like? How many families are you serving? You think you're on target for this year?
We're at 140 right now. So, I mean, if we can get to 160, that'd be awesome. That's where we were at the end of 2019. So I'd like to at least match that number, but we've got some work to do to get there.
Yeah, well, that's still a lot of success in this market. So what do you do? You know, where's your head at to be successful in this market? What have you done to pivot and, you know, come at this market in a positive way?
I think the way you ended that is just in a positive way of really fighting to stay positive. It's very easy to not be positive with the rate environment, and, you know, to be honest, the concern of layoffs just from what you've seen in the industry, and trying to show up every day and be the best that we can be, take advantage of every conversation. And a lot of the conversations that we're having right now, you know, we know that they're not turning into a live app in the next week. And so a lot of phone calls for equity lines, a lot of phone calls for what's going on, a lot of phone calls of we want to buy, but once you go through and do the mortgage coach and give them a total cost analysis, then the cost just, for whatever reason, it doesn't make sense for them to do that at this point. But looking at it from the standpoint of, and we're running everything through our, we use Airtable to kind of keep track of everything. And we have a list that's growing by the day of people that are going to need a mortgage in the near future. It may be 6 months, might be 3 months, but I feel like we are stacking things up in a way that when the market does turn, and it's going to turn at some point, that we have a really good list. We know exactly what people are looking for, what they are able to be qualified for, what they're comfortable for. So when things are ready to go, we're going to be ready. And I think that's just take advantage of every conversation. You know, when these equity line phone calls come in, you know, back in June, July, I would just refer them to the bank, and because we don't do equity lines, and some of them you can maybe try to talk about a cash out refi, but it's going to be difficult to sell that at this point unless there's a true need. And sometimes there is, but I'm taking those equity line calls and I'm going to take a 20 to 30 minute conversation and get to know them better, make a new friend, and then refer them out, try to get their docs, and just be the one to send the docs to the client, to the bank, and really act as their total debt manager. So if you have a need for a loan, whether it's a car loan, equity line, come to me first. Let me be the one to point you in the right direction.
So you said some things I hope people got. Make a friend. You know, this is a market to make financial friends.
Right.
Be a financial friend. At Sales Boomerang and Mortgage Coach, we actually have a shirt about being a financial friend, because and then you said, be a debt manager, be a liability manager. I mean, it's never been more important from all the interviews that I'm doing, that you go beyond being a loan officer and you need to be a mortgage strategist. You need to be able to look at someone's assets, liabilities, goals, cash position, and help them make the right decision today. And then making sure you're putting that in your database in a way so that as the market pivots, you're able to serve all the families. But be a financial friend, be an advisor. So love that. So what are some of the, you know, like you've done, what is it, over 25 TCA'S in the last 30 days. So you're coming to the market with a lot of strategies, you know, mortgage strategies. What are some of the most common mortgage strategies that you're putting out there in the market?
So obviously ARMs have been a big topic of conversation right now. We do have one good investor for an ARM right now through a credit union, and just being able to dispel the myth. There's still a lot of people, you know, they talk to their mom and their dad and say, oh, ARMs are scary, ARMs are scary. But being able to kind of take the fear away from that, and putting an ARM into the conversation, if it makes sense. You know, Mortgage Coach for me, I'm pretty simplistic in the way that I approach it. I kind of have you know, my setup is looking at different products, but a lot of times it's, you know, if you have a conventional borrower, we're looking at the same product, just different rates, different purchase price, different down payment, and really focusing on the planning piece of it. And so when I start with somebody, and you know, I kind of stole it all from Clint Hammond. It was just, what's your hopes and dreams? Trying to understand exactly what it is that somebody is looking for. What do they want? are their expectations in line with reality? And so I start with Mortgage Coach from the from the point of trying to make sure that they can see what reality is and does it align with what they actually want. And then sometimes it's as simple as we're going to look at a $300,000 purchase price with a 5 and 10% down payment, one with points, one with no points. I don't like charging points right now. It's something that we're trying to avoid, but that people are out there. You have your teaser rates, and you can do the same thing. We can give you the shiny object, teaser rate, but let's look at what makes more sense.
Yeah, well, it's about giving people options, and it's about addressing affordability challenges. When rates have gone up so much, that does bring up arms, brings up seller funded buy downs. With the seller doing a permanent buy down, you're hearing a lot of 2-1 buy downs in the market. So let's go through and given your model, given the market you're in, South Carolina, Columbia, South Carolina. Why don't you show a couple TCAs and walk us through how you're helping solve problems in today's market?
Cool. All right, let's see here. So this is kind of a cool story.
Anybody who's watching this live in Facebook right now, if you've got a question or a comment for Travis or for me, put that in chat. This will be in our YouTube channel. If you're watching this at YouTube and you get a takeaway, you get a value, let us know what that is. And if you have a question, put that in there as well. All right, so let's see. We got a builder, lender.
Yep. So this is new construction, right? The builder's paying about $5,500 in closing costs. They got a quote yesterday, and I knew it would be tough for us to compete. It's a really solid referral from a previous client. It's a previous client's dad. My initial reaction to seeing a builder credit of 5,500 and really the same rate that we would have, you got a credit score that's around 710 here. I just said, I think we're probably just going to lose this one. But I said, let me just put this into Mortgage Coach and let's just at least present a different strategy. Maybe we can change the conversation somewhat. Maybe we win it, maybe we don't, but I didn't want to give up on it because right now every loan is precious, and I definitely don't want to leave any borrower behind, right? So I threw out a 6.625 ARM, lowered the down payment. They had like a weird 7.5% down. So lowered the down payment, tried to get the cash to close as close as we could, saved them $100 a month, but ultimately was able to offer a lower rate. The break even by putting in the builder's fees and the seller pay closing costs was really, you're looking at about 4 years, which is a little bit lengthy, to be honest. And I told him that. I said, I do think you might be able to refinance before that 4 years is up, but it really sparked an interest in him to pursue the ARM. And then we started talking about a 15-year possibly, which I don't think that we'll do, but it helped change the conversation, and to be able to put both of these up in front of him instead of just putting together a new worksheet. And I try to avoid a worksheet at all costs. I want to be a mortgage coach. I'll throw their info into Mortgage Coach, but I feel like this was an honest presentation to him of a different option. So it's very simple, but it put both of them on the same page and helped me to see, a lot of times I might make a Mortgage Coach and it sells me first before I even have to sell it to the client, where it just, you can say, okay, yeah, this might be something that could make sense. So this was one I just did yesterday.
Keep this up. I want to break down some things here. So he had to change the conversation, and he showed a strategy that would lower the rate, lower the payment. And then my guess is the way you handled this with the client, they wanted to do business with you. And it also sounds like you started to tell that conversation that, hey, you can date the rate. Like, this is what we're locking it in at now. You're buying the house. A lot of people in our community are saying, hey, you're marrying the house, you're dating the rate. And I don't know if you do this, but I'm seeing a lot of scenarios where the loan officer will put in a third column, and that'll be what the rate might be in the future. So it's kind of like all in one TCA. You're like, here's a strategy, and then here's what it might look like, whether that's 6 months from now or 2 years from now. Before 10 years comes up, this is what it might look like, where you're future casting that. Do you do that?
You know, I don't, I've thought about it, but I haven't done it. That's a great idea and worth doing.
Yeah, let me just real quick, and I'll give you the screen back in just a minute, but I just want anyone who's watching this to see it. This is a video, if y'all haven't watched it, it's one of the most viewed videos for the past couple of weeks of Jeremy talking about date the rate, marry the house. And this is where he's doing it. Like,
Okay.
he's showing an affordability strategy. In this case, Jeremy's doing a 3-point seller buy down. You're showing a 10-year ARM, and then he's showing, hey, this is what it might be. You know, this is what I think it's either Freddie or Fannie is predicting rates will be like this within 2 years. And it's just helping that consumer get over the bridge, you know, create a little vision casting, a little value for them. So anyways, just an idea. So what else you got?
All right, let's see. So this is another example of, you don't have to make Mortgage Coach that complicated. I don't overthink it. This was a VA client who's just, she wants to buy, she's going to buy, but she's hung up on, and I see that I've got one mistake in here. What she's getting caught up over $5,000 difference in purchase price. And what's the everyday calling? What's the rate? What's the rate? So I just put this together to show it's really just not that different. And so in this case, 100% financing, you've got 260,000 with points, 260,000 no points, right? So we're talking about this doesn't change your budget for most people between 1860 and 1930. These people, an additional almost $3,000 out of pocket, that's a budget changer. So if you're going and you see USA advertising 6.5, which I don't know if that's where I got that from or not, we can do the same thing, but it just doesn't make that big of a difference. And so that was my goal with this one. And there's someone that's been out looking every weekend for feels like a month. And I love that I can come to my phone, my computer at home. It takes me 2 seconds to update this instead of printing a worksheet and showing her 4 different purchase price scenarios. This is a Mortgage Coach for me. I try to approach it in a very, very simple way to communicate these types of things to the client.
I love that you said simple.
Yeah.
I hope you'll forward these TCA'S to me afterwards so we can put them in the links down below.
Cool. Yeah.
And then I did I hear that you're updating and using the app as well? You're using the Mortgage Coach app.
Correct. On my phone. Yeah. I try to do it on a computer, but in a pinch, I have it on the phone and I can do it easily. Okay.
So just a reminder to everyone watching this, you can edit and update the total cost analysis both on a phone and on a computer. So, if you don't know how to use that feature, make sure you learn how to use that feature.
Yeah, it's great.
Cool. So let's do another one. I don't know how many more you got, but I've
got one more. This is another pretty similar scenario that I put together. Oops, I didn't take somebody's name off, but I got most of it here. So in this case, we're looking at same purchase price for everything. So these people really wanted to look, their max was $325. I think they wanted a monthly payment around $2,500. And so I started with 5% down, 30-year fixed, 5% down on an ARM, 7-year ARM, 30-year fixed with points. And then they maybe wanted to do 3% down. So I put the 3% down in there. Again, same product, same purchase price, different down payment, different rate. I put these together every week. My process, I used to use the video in MortgageCoach. I like it, but I started to use a screen share kind of Zoom similar to that, and then upload it to YouTube, where I pull open, so you got your taxes and insurance, your mortgage insurance in here, your closing costs are all here, your fee detail. You can see everything that we have here. Our origination fee, that's the fee we're responsible for, just to try to have full transparency so that it doesn't turn into a conversation of, can you send me a rate sheet with all your fees? I have everything in here for you. These are your different options. If rates change, we can go in and update it. And I probably need to go update this one a little bit, to be honest, but these are very similar options. Then you get into the 3% down. Again, I would say I'd probably lean towards the ARM in this situation. I think the rate on this has gone up in the last couple of days, which hopefully it'll come back down, but it's a good starting point for them. There's no questions normally that come back from it. I don't really get that many questions of saying, can you help me understand this? Because using the video, being able to go through it and walk through it with them really helps them to understand what options are available.
I love how you're making things simple and you're just doing everyday loan scenarios.
Yeah.
Knowing that you're using MortgageCoach for every single consumer, you don't have to, by the way, you can stop sharing the screen real quick.
Cool.
And, but knowing you're doing this for every consumer, just riff, if you could, a little bit, how you turn every single conversation you're having into a mortgage strategy. Like, how do you pivot the conversation? If there's some scripting, if there's some phrases that you use, and then I would love to hear, like you shared 3, but just share some of your most common ways of doing things.
Sure. So, Friday I talked with a girl who's recently out of college, lives in Mount Pleasant, just outside of Charleston, and rents $1,800, $2,000 a month, and she can maybe spend $2,500 a month buying. And she was reluctant to go into a credit pull situation. And I really wanted to pull credit, to be honest. I wanted to have her commit to me. And so over the weekend, I put together a TCA for her, said, I don't know your credit score, but I'm just going to start by putting something in front of you and show you what we do. Because it's not just we don't just give you numbers. We don't want to be an order taker. I want to help you to have a financial plan, and you have options. So I put it together for her. And then over the weekend, and I just dropped in, here's a link to our online application. She did the online app Monday, credits pulled, pre-qual letter sent, trying to connect her with the realtor in Charleston, and now have sent a video with a brand new official TCA this morning. And so just, even if someone is not in process yet, you can still use a TCA to get maybe a little bit of buy-in, to say, hey, here's what we do. This is different from anybody else. At least there's obviously more people that use it now, but it's amazing how many people you still run up against that don't use MortgageCoach. And I just think that being able to show people that, their response is always, wow, I have never seen anything like that. That was super helpful. I did one for a cash out refi that I don't think will probably end up activating. He just can't get over the 3% to 7%, but he's paying off $600 a month, $700 a month in credit card debt. And I didn't do the debt consolidation in MortgageCoach. I just showed him what it would be. And I thought he was going to bite, but if he's not comfortable with that, totally understand. But to me, his cash flow is improving every month, and he's getting money to do a renovation. But from the beginning, I set the tone and tell people what to expect. So when we're going through the borrower interview, we're learning about them, they're learning about us, I say, here's what we're going to do. We use a program called MortgageCoach. I'm going to give you 3 to 4 options. I'm going to send you a video that's going to help you understand what those options are. We're going to break everything down. If you don't understand it, let's hop back on the phone. We're going to hop back on the phone anyway, but sooner rather than later, if you have any questions. So I tell them from the beginning, they are going to get a video with my face on it, their mortgage plan, the strategy that we're putting together for them. And I think setting that expectation, then they know it's coming. They open it. You're more likely to get engagement from it instead of just, and I used to just send it. I didn't tell people what was coming. And I realize it now that if I just tell people what to expect, they are bought into it already before they even get that email.
That's super important, guys. I have interviewed just hundreds, over 1,000 top producers. And when I ask them what percentage of your clients, they get the link and they click on it, it's like everybody. And then I have new loan officers all the time, or people that are new to the platform. Hey, how do I get people to click on the link? No one's doing it. Guys, it has nothing to do with the successful mortgage coach or the product working or not working. It's all in the scripting. It's setting some expectation, not saying too much. You don't want to say so much that there's no value in the link.
Yeah.
But really letting people know that, hey, I have put something incredibly valuable together for you that's going to help you make the most informed decision. Some people call it a total cost analysis. Some people call it your personal, options. Whatever. By the way, what do you call it with the family?
Mortgage strategy is probably what I use 80% of the time.
I put together mortgage strategies for you.
Yeah.
Yeah. So whatever you say, if literally 90% of people aren't clicking on it, it's you. You're not saying the right thing. And I just want to highlight some videos that are super important. So first of all, we have this playlist for the best interviews of 2022. So check those out. My interview with Dan Keller yesterday is at the front of the pack right now. I mean, it's just, he's already got over 1,000 views, and not even 20, well, I guess a little over 24 hours ago. This morning, 4 hours ago, this unplugged conversation with Shayla Gifford it's going to be among the top videos. This one, how Nicole is helping listing agents and buyers agents. Check it out. This interview will be in the mortgage strategies playlist. So this, whatever I put in this it's just tactics and strategies that are working in this market. And I can tell you right now, guys, this is a mortgage strategy market. Every top producer I'm talking to has got affordability strategies. Usually they're permanent buy downs, ARMs, or 2-1 buy downs. The date the rate, marry the house, whatever the words people put around that, but that's a common strategy. And then, divorce the rent. And you're seeing a lot of first-time home buyers in the market. I interviewed Jane Floyd a few weeks ago, who's a super iconic, one of the most successful loan officers in the state of Florida. And she's like, we've made it a new team standard that every single first-time home buyer gets a rent versus own analysis. I would highly encourage all of you, because that market is going to be hot for indefinitely. And even when rates do start to go down, I mean, the folks that locked in their rates at with a 2 or a 3, they're going to be less likely to want to move up and sell their home. And so you're gonna be having more move up conversations like, hey, how can you rent out that home with that killer locked in fixed rate and still move up? Like, guys, that will be a big conversation going into next year's spring home buying season. I don't think rates will still be going up. And hopefully we have a very strong real estate market, and we got to get good at that conversation. I do want to show one house hacking strategy, because it's just, I think this is so important. This was a first-year loan officer I interviewed a few weeks ago. This was his 10th month in the business. He did over $1 million in production the month before. This was a referral from a realtor, first-time home buyer, single first-time home buyer. And because rates had gone up so quick, he was like, I'm going to wait a year. I'm off. I'm not going to buy a house right now. And this new loan officer was able to show, hey, rent, show a buy down strategy, make the case that you can buy now and pick the home you want. And then he showed a house hack strategy. He said, hey, you could buy a 3-bedroom house. You could rent out 2 of the bedrooms for $650, and you could invest that with a financial planner and look what your net worth might be in 5 years. And so by making this clear to this first-time home buyer, they were able to really get a first-time home buyer off the fence and into home ownership. What are your thoughts on that one, Travis?
That's pretty amazing. I mean, how many people forget or don't even think about the opportunity to rent out to friends? I mean, it seems like it'd be pretty easy, and especially in our market in Colombia. I mean, it's a college town. There's plenty of young adults out, young professionals just out of college that would easily rent a room, and the rent prices on those is pretty insane for what you could get.
Another tactic for you, especially being in a college town, is proactively reaching out to families that, had a kid graduate from high school and start talking about the duplex or the house hack. Like, how can a student, go to college and also either have a duplex, owner-occ duplex, or house hack, or when they graduate from college, that should be a proactive conversation for mortgage professionals, that when a family has a one of the kids that talk about owner-occ duplex, talk about owner-occ single family house hack strategy. I really recommend, guys, we need to bring the opportunity to consumers, especially in a market like this. We can't just wait for the phone to ring and say, hey, can you help me finance this home? What are your thoughts on that one?
Yeah, I think just being proactive. Like I said, the phone isn't always ringing. So what can we do? Is it being present on video and say, I want to get with a realtor and we can go sit in front of a duplex and shoot a video and talk about how can you house hack this, and just trying to serve a realtor with helping them to understand what options there are for that. And that's been my go-to. What can I do to serve realtors right now? Without any knowing that there might not be business coming in. So I've been trying to do a lot of video stuff, just getting in front of realtors and asking if I can video them at their listing, and just try to help get some conversations going about possibilities that are out there.
Love it. So before we run out of time, I want to close out on, you had mentioned that you've watched a lot of Mortgage Coach YouTube videos. If you don't mind just sharing what your habit was and how you did that, because there's a lot of new loan officers in the market, and that's also, one of the reasons why we do this and why I do this is just tell us, how often you did it, how you decided which videos you were going to watch, and just share what you did. I'd love to hear it.
Yeah, so I would say that in the last 2 years, I haven't been that consistent with it, just because we were so busy. But when I was new, I had closed 65, 66 units that year. Wasn't that busy. It felt busy, but I didn't really know what busy was yet. I would just say, if you feel discouraged, if you feel bored and you don't know what to do, just get on it. Go through and see, you got the heavy hitters, you see Jeremy Forcier on something, you watch it. Just because for me, I learned how to use Mortgage Coach through those videos. Also learned from Clint, and even though we kind of do it a little bit different now, but sometimes just watching those, it just gets your mindset right. And I think that's probably what is as important as it is to learn the scripting and the strategies. It gave me the hope and belief that I can do this. I can use this program. I can use this to make a difference in people's lives. And there's a spirit of encouragement and positivity in those videos. And so really, when I was bored and didn't have anything to do, I was going to be in the office. I wasn't going to sit at home and kind of screw around. I wanted to be present and listen to conversations in the office that were going on, and then watch the videos, even if it wasn't the whole thing, just watch 30 minutes at a time. But I would say I watched at least 2 to 3 a week. And I feel like there's even so much more content now than there was 5, 6 years ago. Open it up, Facebook, the YouTube page. There's so many different options, whether it's to learn how to use it, getting comfortable calling realtors, which I still struggle with, but I'm progressing every day.
Yeah, well, guys, we create that. I mean, there's no doubt it is a mind shift boost. So there's no doubt if you are searching for positive content that will make you know just how much opportunity there is as a mortgage professional, that just about every video checks the box. If you are looking for skills and ideas to help you win in the market at hand, watch the most recent videos in that YouTube channel. If you're new in the business, we got a new loan officer playlist. So just made for new loan officers to get their head right and learn the skills and tactics. If you're new to Mortgage Coach, we have a Getting Started with Mortgage Coach playlist. Just about optimize your database. If you're like, hey, I need to really get more business out of my database, I'm not closing as many loans from my database as I could and should, which is over 90% of loan officers in America.
Sure.
And by the way, it's 95%. So maybe 1 out of 20 loan officers listening to this is optimizing their database. That's maybe. It may be worse than that. So, we're here to serve. Any closing thoughts for the Mortgage Coach community, Travis? This is your first interview on our YouTube channel, and anything you want to say to close things out?
Yeah, well, thank you again for having me. I think the only thing I had notes on is that I didn't bring up is I use the fee templates. It's such a time saver. I don't use a ton of product templates, but you're asking about integration. I have no idea how any of that works, but I can push a button in our LOS and it transfers into Mortgage Coach. So that's super nice to have that ability. And so from clicking that button to being finished, it takes me less than 5 minutes. It would take just as long, if not longer, to print 4 worksheets. And so if somebody's new and feels intimidated by Mortgage Coach, set up a fee template, have a couple things that you're going to have to maybe fix each time, but use templates. It's such a time saver. There's no reason to not use Mortgage Coach for every single transaction that you have.
Well, for me, just hearing you out, like you're very high touch, local pro, you're very high tech, keep it simple, keep it easy for the consumer. And dude, you're killing it. So congratulations on finding the mortgage business, and congratulations on becoming one of the top producers in the industry. And super grateful for Clint Hammond. Clint, if you're listening in, thanks for mentoring this guy and turning him into a leader. And thanks for just giving advice out there in Colombia, South Carolina. I appreciate you, brother.
Go Gamecocks.
All right. So guys, if you got value, give this a like. If you're not already subscribing to our YouTube channel, make sure you subscribe today. Make sure that you share this with your mortgage friends. And this is a wrap. Take care, everybody.
Thank you so much.